Welcome guys, here's a video breakdown, market forecast, because I know that you like when I do create some videos occasionally, once or twice a week. So here it is. Tomorrow I will host a webinar as well. I will announce it and you will see the schedule for that. But for today, here is the video breakdown. I will be try to really quick with the breakdown because this is really just an update. You have to follow the daily markups in order to fully understand what is going on. So I'm not going to break down everything that has happened before this price action. No, I leave it for the webinar. Today is just a quick update on the watch list. So Euro US dollar mitigated the 71 level, which we previously marked, and right now we are inside of this level. So what comes from this is that we switch down to a 15-minute time frame once the 71 level is mitigated. This is the golden rule. There is no usage of the 15-minute time frame without 4-hour 71 level mitigation, you know this. And now we switch down to the 15-minute and look for entries, for bullish confirmation entries. What we have here is that price shifted the market structure immediately after mitigating this level, and it was a pretty aggressive reversal right after the mitigation, and price shifted the structure. One problem with this is that this is Asian session, so the confirmation happened in Asian session. So technically this is a right valid entry. I mean, it would have been a valid entry if it would have been outside of Asia, but since it's not outside of Asia and we stick the Fibonacci to the Asian box, so if you stick your Fibonacci to any kind of candle that is inside of this Asian purple box, the setup is invalid and you have to reconfirm it. I mean, it's a pretty damn shitty situation because beautiful sweep, beautiful order block at the 71 level, beautiful liquidity is being built up for this 71 level. But rules are rules, and rules are there for a reason because they are protecting you from lots of unnecessary losses. So I would rather reconfirm region than make any kind of formal decision to break my plan. So yeah, what I'm expecting here is the reconfirmation of the 71 level. This is the first plan. The second plan is continuation to the upside, like price sweeps liquidity from underneath the low point and it continues to the upside, breaks the high point, we have a continuation break and we can enter on the 71 level. And the third plan is also really simple. Price comes down and decides to sweep out the whole entire Asian liquidity from where it shifts the structure back up to the upside. Then we will have a new valid limit order again. So yeah, these are the plans on Euro US dollar. Unfortunately, no direct entry. Moving on to the next pair, which is GBP US dollar. We have interesting situation going on right here on GBP US dollar because previously on GU we were bullish. Okay, I didn't mean to do this. So we were bullish, really bullish. But ever since this high point was created, price started to drop down. After this high point, price just broke the last recent low point, and it wasn't just a sweep and the counter to the upside because right after the break, price created a pullback and made a continuation break, which is confirming that we have a bearish structure leading to the downside, and we are prioritizing short trades over long trades. What we have here, if you are zooming in, what we have here is that price created the last recent protected high point here, from where it made the continuation break technically to the downside, and the 71 level is located here. Okay, there is the trading range which we were looking to be mitigated, this 71 level, and we're looking for shorts there. What I additionally drew here is that there was a counter-sided bullish range which basically broke this high point right here. From this low to that high there was a trading range, and I told you that we can look for longs on this level, but ideally you are still looking for shorts. So basically now we are stuck in between the two 71 levels because this is not broken and it's holding, and the bullish 71 level is not broken and it's holding as well because price is wicked below this one level, which is a liquidity sweep. So switching down to the 15-minute time frame, showing you the plan that what can be expected. So this movement here to the downside is a sweep. This is not a break, this is a simple liquidity sweep. What else we see? What else we can prioritize and what else we can do here? I told you in the markups that this is the market structure low point. This needs to be broken in order to have a shift on the 15-minute time frame into a bearish direction. Now this is broken, so technically we shifted the structure. The structure shift came with no liquidity sweep, no protected structure. So basically this wasn't a valid entry because I also told you that we need the break of this low point in order to have a valid entry, in order to actually enter in a trade on the bearish side. So yeah, That is one thing we are still waiting for, the break of this low point on the 4-hour time frame. So ideally, what I'm looking for here is pretty. I would say it's hard. Currently, GBP US dollar is a little bit hard because we are looking for bullish and bearish trades at the same time. So on the bullish side, since we are in this bullish 71 level, what you are ideally looking for is a sweep of liquidity, like a sweep of a previous low point from where price can aggressively continue to break this high point right here. This is the high point I need to see breaking before entering in a bullish trade. Technically, the sweep is already there. You can see that price swept out this Asian low point from where it started to move to the upside. So if price breaks this high point, then yeah, I will opt in for a long, but I will keep an eye on the shorts as well, because price can easily confirm technically one of these levels. Yeah, this can be considered mitigated already. So yeah, basically, yeah, it's hard. GBP US dollar is hard to trade right now because we are really stuck in between these two levels. So yeah, once again, from this sweep, if price continues to break this high point, you can enter in a long trade, but please monitor this pullback. If this pullback will be really aggressive to the entry, to the bullish entry, skip the bullish entry, okay? Because that way you will know that this is a sweep above the high point from where price will break the actual 4-hour low point here and will create a bearish setup. And once price decides to create the bearish setup, like for example, it can be an Asian high point sweep as well, and from where it breaks this low point right here, you can enter in a short trade. But the break has to happen on the 4-hour time frame right now because we are in a really tricky situation. So this is the plan on GBP US dollar. I know it's a little bit tricky, but we have 7 other pairs to trade on, so don't be worried about it. So, but I actually do believe that GBP US dollar will be pretty rewarding today. So here we are, a USD GPI 4-hour time frame. What we have was a really nice bullish flow, and we just mitigated the less recent bullish swing type of level, pulled out from this low point to that high point. There is a 71 level. We mitigated that area. And I also drew a bearish area from high to low. Price rejected on that area before it rejected on the 71 area on the bullish side. So here we were stuck in between two 71 levels as well. Pretty tricky, but now the direction is finally decided because you can see that after rejecting on the 71 level, we weren't given any kind of confirmation entering the 15-minute time frame. I will explain it on the 15-minute time frame, and I called it out perfectly. I literally saved you from 2 losses here on this pair because of the markups I have sent you. But now we see that price was unable to create any bearish movement on the 71 level and is just continuing to the upside, so we will be able to look for bullish trades. So the plan now, I'm keeping these bearish levels on my chart because I want to explain it on the 15-minute time frame, but the plan now on the USD GPI is to look for bullish trades. Either a bullish continuation, because we are still coming from this bullish level, so you can look for continuation trades or reconfirmation. But let me just explain it on the 15-minute time frame. First of all, the bearish plan. So we had this bearish 4-hour level, bearish 4-hour level here. This is the 71 level of that bearish 4-hour level. And price rejected there and made this bearish movement to the downside. But I told you not to enter here because this is way too swingy. There's not enough risk-reward ratio to target, so this is not a valid trade to actually enter into. And what I also told you, that this low point needs to be broken right here in order to have a market structure shift. So you saw that there was a wick below. And basically, this wick below wasn't really valid because this is the market structure low point. And you can see that this cannot be titled as market structure because this is 1 candle pullback. This is 1 candle pullback as well. The only valid structure is here, 3 or 4 candle pullback. So this is the low point that needs to be broken. And with this not so impulsive bearish movement, I needed a body closure because this wasn't decided that, yeah, I want to change the structure, I want to go bearish, because price was struggling to go below this low point. It was really struggling. It was really struggling to create any kind of bearish movement. So that's why I decided to call this as a pending shift and only look for a body closure. Body closure was given there, but this high point was not protected, so it wasn't an entry opportunity. And basically none of these high points were protected, so none of those were entry opportunities. Therefore, you couldn't enter in the market. And I also pointed out this in the markups. So right after this, price just started to go to the upside, broke this whole entire range, broke everything here. And this is why we use these rules. This is why we have these rules, because Without these rules, it will be so random to trade. You will trade 15 times a day, every single day, on every single pair. It will be random. Now we have a strict trading plan that we are keeping ourselves to. Now, the 4-hour plan, the 15-minute plan, like I told you, you are looking for continuation trades. Ideally, and not just ideally, but most likely this high point will be broken. So we are looking for continuation trades, like, a sweep of a low point, break of a high point, entering there. And you can also look for reconfirmations, like reconfirmation of this Asian range right here, which is protected, or reconfirmation of this overall bigger range, 4-hour range right here, which is also protected. So you can go for reconfirmations, but you can go for any type of continuation trade up to the 4-hour high point here. So continuation bullish trades are valid. You know the plan right now, because this is broken down in the video course. Anyways, US dollar, Swiss franc is the next pair. I will keep this really simple and short. Let me just do this from here because we don't need those anymore. I will keep this really simple and short. So price just decided to create a big bearish reversal after this little bullish pullback. There was a huge drop down break of Fibonacci level there, and we just drew two Fibonacci bearish levels, one here and one here. So price mitigated the less recent Fibonacci level, so we are looking for bearish confirmations on the 15-minute time frame, because once the 4-hour Fibonacci level is mitigated, you are switching down to the 15-minute time frame immediately. And technically, the market structure low, I will title this as the market structure low because if you really want to be valid, this is the market structure low, because this is the real pullback right here. But why I want to title this as a substructural low point, because there's a bearish candle, and which was basically the low range was broken, so this is technically a 2-candle pullback from where price impulsively made a bullish movement. So if this low point breaks, it will be an internal structure shift. If this low point breaks, it will be an external market structure shift. And what you are looking for ideally is that, let me just tell you, if one breaks, if this breaks, then the lower one will break as well. What you're looking for here is basically a sweep of a high point, like sweep of this high point right here from where price shifts the market structure. Then you can enter in a short trade. This is the plan. This is the master plan on US dollar, Swiss franc. Or, the second plan, like usual, the whole entire sweep of this liquidity pool. And once there's a sweep on the, what the fuck am I doing? Why is this happening? Why? Oh my god. Okay guys. I'm sorry for this. You saw what happened. Oh my god. Let me just do this. Okay. Now we are so back. Okay. So you are looking for the sweep of this high point, because if this high point is swept out, it will mean that you have a new low point which can be shifted. This will be the new low point if this high point is getting swept out, and then you can enter in the market, just the usual plan, like every single day. Moving on to the next pair. I have to be really quick with this. Remaining breakdown, because I have to leave in maximum 10 minutes. So, EURUSD, we have a really nice bearish flow. Price just swept out this whole entire liquidity pool here from where it made this big continuation break to the downside. Therefore, you are pulling out a bearish Fibonacci range from this high point down to that low point. You have this, you can enter here directly if you are trading the 4-hour time frame. This is a perfect 4-hour trade. So set a limit order here if you're trading the 4-hour time frame. Otherwise, just confirm this level and enter here with bearish 15-minute confirmations. This is the plan on EURUSD, really simple plan. Next up is GBP GPI. On GBP GPI, we have the exact same situation as on USD GPI, if I'm not mistaken. That was the pair which we had the same situation on. Exact same situation, where price rejected on a swing level or an external level here, and we had a bearish level pulled out from high to low as well. We rejected on that level, and I told you how to look for confirmations. That confirmation couldn't happen. We couldn't take any kind of short trade here, and therefore price is just showing aggressive bullish pressure to the upside. So right now we are looking for bullish trades basically. So what you are looking for is bullish continuation trades, just like on USD GPI, like a continuation trade. You know how a continuation trade looks like. Or you are looking for the reconfirmation of these ranges. For example, sorry, you are looking for the reconfirmation of these ranges. For example, this one, or for example, this one can be reconfirmed as well. But if price creates a continuation break, like, you know, comes down here, sweeps low, breaks the high, there will be a continuation setup, you can take it. So right now you are looking for bullish continuations and bullish reconfirmations, just like on USD GPI. EURUSD is pretty simple, because EURUSD is just moving into bullish direction non-stoppably, and right now we just broke the last recent external high point. We have a continuation break located there, and basically we can pull out two Fibonacci ranges, one from this low, one from this low, and both of these levels can be confirmed. So you are looking for a bullish confirmation here, or you are looking for a bullish confirmation here. It's this simple, nothing to be overcomplicated. And the last pair will be GBP NZD, which is the exact same, just on the opposing side as AUD USD. It's moving into bearish direction, really aggressively moving into bearish direction now. And what we can do right here is that we can pull out Fibonacci ranges. One can be pulled out from this high point, one can be pulled out from this high point. This is the last recent 71 level, and we are looking for the confirmation of these levels. Right now we have inducement liquidity built up for this level as well. So if price comes up and confirms this, it will be a really strong trade, really strong short trade. Second case scenario, if price breaks this low point, we will have a new trading range from high to low. You can pull a 71 level here and you can reconfirm that level just like everything else. Alright guys, this was the market breakdown. Wish you guys a profitable trading day. Take care and goodbye.